So Patrick, with your experience in the banking sector and your oversight of maritime desks, I would like to ask, what monetary policies, particularly from the central bank, and fiscal incentives do you think should be introduced to encourage participation from new or old players in the maritime industry with respect to ship acquisition?
Thank you so very much for having me in this discussion this afternoon. When you're talking about fiscal incentives, what are we talking about? We're just saying, how would government support operators in this sector to take advantage of one or two benefits that abound in the market? So what we're saying is that I remember some time ago in 2017 when Nigerian Investment Promotion Council, NIPC, and Federal Inland Revenue Services came up with a document where they are doing investment incentives for the Nigerian economy. And the maritime industry was completely left out in this compilation. So I think this is something all the stakeholders need to come to the table and see how we are going to address this big issue. It is a big issue. Having said that, what the government can actually do, which Emeka has also touched, the DG Nimasa has also touched about it, is things like waivers on import duties for vessels. Emeka also talked about foreign vessels are allowed to post temporary importation bonds, while Nigerian-owned vessels are meant to pay full duty on this asset. From day one, it puts them on a disadvantaged position, which shouldn't be. So this should be addressed and taken up to the high level, and we'll see how this can be sorted out as quickly as possible to the benefit of local operators. It's also in line with cabotage opportunities that it's all about building capacity. You don't build capacity when everybody is not placed on the same playing level. The foreign vessel owners already have advantage in terms of cost of operations. So having said that, we also want to address the issue of tax holidays. The government can say, for those who are coming into this industry for the very first time, we'll give them 2 or 3 years tax holidays. They won't pay tax, corporate tax. We also have what is called the status, the pioneer status, for those who are coming into an industry for the first time. They're given some incentives like tax holidays, waivers, and also I think what is most important is there's need for government to set up intervention funds, just like we have in other industries. We have the PEF, which is Power and Aviation Intervention Fund, that was set some years back to help operators in the power and aviation industry, to give them this loan at very low interest rate. That also is a financial support that the government can do to help local operators. So these are a few things I think government should look at. Set up a maritime incentive fund to help operators. We already have the CVFF and we also have the local content fund. If you put the two of them together, we're talking $500 million, which can actually not buy one very large crew carrier. So we need a heavy pool of funds in this industry to help operators. That also will take us a bit further for the need for Development Bank or Maritime Bank. These are banks that will raise bonds in the market, 20 years bonds, 10 years bonds, 15 years bonds, and they will use this to support operators in this industry. Sincerely speaking, commercial banks' input are not the market to fund assets of longer terms, because the deposit the commercial banks have are really short-term deposits, and the fundamentals of banking. You can't use short-term funds to fund long-term assets. So when they're saying the commercial banks are not giving out this money to acquire these assets, they really want to, but they're constrained. They can't do it because these are depositors' funds. If you keep your money in the bank and the bank uses it to finance an asset, and next tomorrow you come to take your money from the bank and the bank says, sorry, we can't give you your money, it becomes another kettle of fish altogether. So there's need to set up industrialized bank that's going to raise bonds and long-term financing. That will also take me a bit further. I also want to talk about sectorization. It's also another form of raising funds in the market. What does this mean? It's all about pulling assets or a group of assets into a pool and converting them into marketable securities to use them to raise funds in the market to help the local operators. So this is also an opportunity, or it's something we can actually explore in this market. But the fundamental issue when you are doing this kind of structuring is that the assets in question must have a cash flow, steady cash flow. The liquidity must be there, and the convertibility of these assets into liquidity must also be there. So these are the things we need to address. There's a lot of policy inconsistencies in the sector that need to be addressed. The banks really want to lend out money. Once a sector is completely de-risked, the banks will throw in money there. So you can see what is happening today in the upstream sector of oil and gas versus the downstream sectors. The banks can give out money to support operations in the upstream because that sector of the market is completely, or to a very large extent, the risk, while the risk in the downstream is much more bigger than the risk in the downstream. So I will also want to touch on the structure of Nigerian businesses. So when Emeka was talking, he said he was able to raise funds because the business is completely structured. That's the kind of businesses the bank wants to lend money to. And how many of those companies do we have out there? There are very few of them. So the banks will not just throw money because there's a need to throw money. They need to know that there's a cash flow, and that's the basis why the banks are lending. If the bank can't trace that cash flow, then forget it. Nobody's going to put money there. So structure, business structure, it's very, very, very important when banks are analyzing risk in the market. Thank you.
Thank you very much, Patrick. It seems you've touched a lot on this financing from the perspective of the banks. I just want to ask you one last question. From your experience, what would you say is the percentage of successfully repaid ship finance facilities to successful ones? Are there specific challenges you've experienced in the enforcement of securities for ship finance transactions?
Okay, I will take it this way. When we had the financial crisis of 2014, 15, 16, so many banks have financed some vessels because they have financed those vessels without long-term contracts. When the issues came up, the IOCs could not renew those contracts, and those vessels were out of jobs. That means there's no cash flow. So the operators could not pay. They couldn't pay because they don't have jobs they were doing. And if there's no job, there's no cash flow. And if there's no cash flow, they cannot pay. So the next thing is assets realization. In a system where the entire oil and gas industry was going through a difficult time, who is going to buy this asset? Nobody. So when you go on the marine areas of Lagos, you see all the assets lying on those waterways, the same thing as in Warri and in Port Harcourt. So realization of collateral became a very serious problem. So what do banks do? They had to take provisioning on those loans. which is not very good for them. So in terms of collateral realization, what makes it easier is if there are alternative use of this asset, which Jeremy talked about, asset that is specialized and specific, that doesn't have alternative use. So what are you going to, who is going to buy this asset? Absolutely nobody. So what would the banks do? Are they going to pull out the steel and begin to sell steel? Or what would they do? The only option is to provide for the vessel, provide for the loan, make 100 provision in line with prudential guidelines. Because when the CBN and NDIC auditors will come in, they will say that this loan has not been performing for over 90 days, 180 days, or 360 days, as the case may be. And you are required to take those portions of the loan out of your profit so that depositors' fund can still be intact. So that is a major problem, that we don't have alternative use to this asset. So in terms of percentage, I could say maybe roughly about between 30 and 40%. And the banks really carrying a whole lot of bad loans from this industry, I can say that. Thank you.
Sorry, Patrick.
Yeah.
Just following on your question, I wanted to ask a very quick question on the securitization that you mentioned.
Yeah.
Then that means there's a need, like Mr. Ondu mentioned, to also educate SEC as well as the pension funds, because those are two areas. The pension funds are sitting on long-term money, and currently their guidelines don't allow them to touch things like shipping.
Yes.
What we've all said here this afternoon is that we need long-term money. Even
exactly.
if we're taking the EFF funds, even if we're taking the NCF funds to do it, we still need something to counterpart it or match it, either a ship, a bank, or we tap into the long-term market. Do you see value in sitting down with SEC to educate them on the opportunities of long-term funding, as well as the pension funds, PENCOM as well, too? If you can address that quickly.
Oh yes, there's a whole lot of opportunities there, and if we're able to address that, that will put a whole lot of capacity in terms of funding for the maritime industry. Yet it's an initiative I will also want to be part of, those who are going to drive it, to sit with SEC and to sit with pension fund, because they are the people that should actually be funding the maritime industry, not the commercial banks, because they have long-term funds sitting with them. It's also just to let them see that there's light at the end of the day, that when they invest their money in this industry, that they are going to recoup their money over a period of time. All investors want to see is that at the end of my investment tenure, that I'm going to recoup my principal plus interest, and people will go into such a venture. So I think there's need for us to take up this initiative and see how far we can run with it. Thank you.